2018 ginawa, pero ang coverage niya prior years. 2018 nag-correct. Pero ang kino-cover niya prior years. Noong 2017, meron ng 6,000. Tapos, ang dapat talaga, 9,000. So, kulang pa ang accumulated ng 3,000. In effect, noong 2018. Pero, ang coverage niya, prior years. Kaya naka-charge sa retained earnings of prior years.
Thank you po.
Malinaw na. Ha? Nag-gets mo?
Opo, sir.
Ang tamang figure, 9,000. Pero sa libro mo, meron ka ng 6,000. Hindi kulang ka pa ng 3,000. Ay, in-effect mo siya ng 2018. Hindi mo naman siya in-effect ng 2017. Ay, di charge to retained earnings of prior years.
Thank you po, sir.
Nasagot ko ba tanong mo?
Opo, sir. Opo.
Lawrence, tinuro ba sa inyo sa college yung present value at future value? Annuity values?
Di ko po tanda, sir. Pero familiar po ako sa terms.
Okay. So actually, meron pang wala, ano? Okay, so meron pa tayo. 15. Meron pang kulang. Laura, tinuro sa inyo yung compounding interest, ano? Lawrence? Compounding interest, ha?
Hindi ko
Tinuro
po,
na sa inyo.
hindi ko po tanda.
Meron pa tayo.
Sir, di pa po ata gawa ng ano, hindi ko po nare-recall.
Oo. Time is it? Time. Isa pang kulang. 16, 17, 18. Dalawa pa. Okay, 16. Dalawa pa kulang.
Sir Roy, daw po, sir.
Okay.
Sir Roy, pwede magtanong po muna.
O sige.
Ano lang po, sir, yung related lang din po dun sa tinanong ni Lawrence. Itatanong ko lang, sir, po kung bakit po sa retained earnings naka-less po yung accumulated depreciation.
Ano, kasi yung correction mo, dapat, talaga yon sa 2017, no? Kaya lang, ang problema, kung sa 2018 ka nagko-correct ng 2017, Sarado na yung libro ng 2017. Lahat ng expense income noon, nakasarado na sa retained earnings. So, kung ganoon, kung meron ka pang correction sa expense and income pertaining to 2017, ang gagalawin mo na lamang yung retained earnings ng prior year. Sarado na yun eh. Kasi kapag ikaw ay gagamit ng expense at income para makorek, apektado yung yung bukas na libro mo ng 2018. Lalaki ang expense mo. Kaya naman ay dapat sa 2017. Diba? Kapag tayo ay nagsasarado ng libro for the year, lahat ng expense at income mo, i-summarize yan, ineneto lahat yan, sarado niya sa retained earnings. Every closing of year yon. Sarado na yung 2017 eh. Pumasok na sa retained earnings, yung income, yung expenses, sarado na. Tapos babalikan mo ng 2018, gagalaw yung expense at income, ay hindi pwede. Retained earnings na lang galawin mo. Kasi doon na pumasok lahat yung prior years. Nakuha mo?
Opo, sir. Salamat po.
Okay. So, malaluan.
Yes po, sir.
Laksan mo yung volume, hindi ka namin makinig. So,
Dinig po?
mahina.
Dapat yung wait po.
Daurans, kinig mo ba si Kia?
Mahina, sir.
Mahina pa din po.
Oo. Sige nga, magsalita ka nga.
Ay po.
Mahina, ba?
Mahina eh. Daurans, kinig mo?
Sir, mahina po.
Mahina. Ano to? Okay. So, kung mapapalakas mo ba ang iyong volume, mas maintindihan ng audience ang iyong sasabihin. Okay, class. Good evening once again. We will be continuing talking about the rest of business combination. We are nearing the end. We are nearing the end. And this evening we have Kia to speak on what he has read, he has studied, and share tonight for us learnings. Learnings. Okay, Kia, start. Increase your volume.
Dinig po ako. Dinig po ako.
Ay, wala tayong magawa kung hanggang dyan lang ang volume mo. Ang ganda pa naman ng screen, malinaw.
Malakas po. Mahina pa
Hanggang dyan
din.
na lang ba yan? O
Opo,
sige,
sir.
okay, you continue. Wala tayong magawa dyan. Sige. Ako, malakas ba dating ko? Malakas ba dating ko? Kaya,
Opo, sir. Malakas po.
hindi ko ngayon na mag-report.
Ano
Oo.
po, sir? Wait.
Ano na?
Nagpapalit lang po ako ng phone. Wait lang po. Okay na po.
Ayan, okay na yan. Okay na yan.
Recording contingent consideration in acquisition of stock. Illustration 13.6. On January 1, 2017, Papa Ltd acquired 75% interest in the equity capital of Anak Ltd. On this date, the identifiable assets and liabilities of Anak Ltd are valued at 200 million. The maintainable profits of Anak Ltd are estimated at 40 million per year. On the basis of price-earning ratio of 10 times, the fair value of the ordinary shares of Anak Ltd is estimated at 400 million. The purchase consideration consists of the following terms. First, an initial payment of 100 million on January 1, 2017. Second, an amount of 110 million payable on January 1, 2018, contingent on the achievement of the maintainable profit of 40 million in the first year. And last, an amount of 121 million payable on January 1, 2019, contingent on the achievement of the maintainable profit of 40 million in the second year. Anak Ltd's maintainable profits have been averaging about 40 million per year in the past 5 years, and it is probable that this level of profit would be maintained in the foreseeable future. At the acquisition date, Papa Ltd's borrowing cost is 10% per year. The computation of the cost combination in January 1, 2017 and the goodwill and combination are as follows. Para po makuha yung cost of combination, first, in terms of million po, initial payment, 100 million, plus contingent consideration payable, 100 million. At para po makuha yung 100 million 110 million po, yun po yung payable po noong 2018. Second po, contingent consideration payable, 121 million divided by 1.10 raised to 2 is equal to 100 million pesos, with a total of 300 million pesos, which is the cost of combination. The acquisition cost shall be recorded as follows. Debit investment in subsidiary 300 million and credit cost 100 million and credit consideration payable 200 million. The goodwill and combination is calculated as follows: terms of million. Aggregate of fair value of consideration transfer 300 million, adding non-controlling interest at fair value 25% times 400 is equal to 100 million, with a total of 400 million. Kaya po ginamit yung 25% since yung ordinary share po ni Anak Ltd estimated of 400 million. Inacquire po ni Papa Ltd yung 75% interest. Kaya po yung the rest po yung ginamit, yun po yung non-controlling interest at fair value po, which is 25% po. Less fair value of an identifiable net asset, which is 200 million, with a total of 200 million, which is the goodwill and combination. At the end of year 1, the investor recognizes the accretion of the liability and payment as follows. Interest expense, 20 million debit, 2% times 200 million. And debit contingent consideration payable, 90 million. And credit cash, 110 million. At the end of year 2, the accounting entries would be as follows. Interest expense, 11 million. Debit contingent consideration payable, 110 million. And credit cash, 120 million. Changes in the fair value of contingent consideration. When a contingent consideration is based on a specified level of future earnings and a specified level is achieved, there is no adjustment to the cost of combination and the consequential goodwill and combination. However, when the specified future events do not occur, such as not meeting that the additional information that the acquirer seeks about facts and circumstances that existed at the acquisition date. Accordingly, within the measurement period, the cost of investment shall be adjusted as a measurement period adjustment. The resultant effect of this subsequent adjustment is on the amount of the goodwill computed initially. However, the measurement period shall not exceed 1 year from the acquisition date. Illustration 13.7. PLDT acquires 100% interest in the equity capital of SLTD on January 1, 2017. On this date, the fair value of the identifiable net asset of SLTD is 30 million. The consideration is agreed 60 million in this case the capital status of 5 million. Maintainable profit of SLTD with a price-earning ratio of 10 times. The terms of payment are as follows. First, 30 million upfront when control is passed to PLDT. Second, 11 million at the end of the first year if the profit of SLTD is at the least 5 million for the first year after the acquisition. The third, 12.1 million at the end of the second year if the profit of SLTD is at least 5 million for the second year after the acquisition of the last year. In the event that the profit level is below the 5 million level, the amount payable is reduced accordingly by shortfall multiplied by a factor of required. Determine the cost of combination and show the journal entry to record the acquisition. Also, determine the goodwill on combination. B. Assume that the guaranteed profit of 5 million is achieved for each of the next 2 years. Show the journal entries to record the subsequent payments made after year 1 and year 2. C. Suppose only 4 million profit is achieved in year 1. Recalculate the fair value of the contingent consideration at the end of year 1. Show the remeasurement period adjustment to the cost of combination and the revised goodwill and combination. Solution 13.7. Para po dun sa A, the cost of combination should be 50 million and this is consists of cash payable upfront 30 million and present value of contingent consideration for year 1 10 million. Para po makuha yung 10 million ay 11 million divided by 1.10 raised to 1 since it is the year 1. Next is present value of contingent consideration of year 2, 10 million. Para po makuha yun ay 12.1 divided by 1.10 raised to 2 since ito po yung sa year 2 with a total of 50 million which is the fair value of consideration transferred. The entry to record the acquisition of stock is debit investment in subsidiary at cost 50 million, credit cost 30 million, credit contingent consideration payable 20 million. The goodwill for consolidation purposes 50 million minus 30 million with a total of 20 million. The contingent consideration payable is classified as a financial liability and carried at the amortized cost effective interest method in accordance with IAS 39. Para po dun sa required B, when the specified level of earnings is achieved, the journal entries for the subsequent payments are as follows. For the year 1, contingent consideration payable 9 million, debit finance cost 2 million, and credit cash 11 million. To record finance cost and cash flow. At the end of year 1, the contingent consideration payable is carried at the amortized cost of 11 million. There is no change to the cost of combination measured initially. Hence, goodwill and combination remains at 20 million. For the year 2, contingent consideration payable 11 million, debit finance cost 1,100,000 and credit cost 12,100,000. To record finance cost, cash paid, and the recognize the contingent consideration. Letter C. In this case, OPL data will consider the failure to meet the specified level of earnings as additional information about facts and circumstances that existed at the acquisition date. Based on the additional information, it revises the estimated value of the contingent consideration as if that information were available at the acquisition date. Thus, the fair value of the consideration transferred and remeasured as follows. Cash paid upfront, 30 million. Contingent consideration for year 1, 5 million. Contingent consideration for year 2, 5 million, with a total of 40 million, which is the fair value of consideration transferred remeasured. Thus, the fair value of contingent consideration is revised to 1 million times 5 times 2 years is equal to 10 million in present value terms. The reduction in present value terms in the amount payable in each year is 1 million times 5 is equal to 5 million, or reduced by half of in the future value terms. The journal entries for the subsequent payments are: for the year 1, debit contingent consideration 14,500,000, finance cost debit 100 million, investment in subsidiary 10 million, credit cash 5.5 million. To record finance cost cash paid in effect a measurement period adjustment. At the end of year 1, the goodwill is reduced to 40 million less 30 million is equal to 10 million. The balance in the contingent consideration under the amortized cost method is 5.5 million. For the year 2, debit contingent consideration payable 5.5 million debit, and debit finance cost 0.55 million with the, and credit cash 6.05 million. The record finance cost cash paid and then recognize the contingent consideration payable. Note that in year 2, if there is any further change to the amount payable based on the level of earnings achieved, it is outside the measured period. Thus, any such change shall be recognized as gain or loss in profit or loss.
Okay. Now, for those figures appearing, those amounts appearing, kung hindi mo uupuan yan at magpo-full concentration ka, intindihin mong mabuti, no? Hindi mo masasagot yung tanong mo na bakit yung numerong yon ang lumabas, So, hindi mo yan magigets sa isang normal na reading lamang, no? But be sure that you can explain kung bakit lumabas ang ganong numero, no? Now, we are seeing also application here kung tinatawag na the present value of money, no? The present value of money. So, kung meron yung present value of money, meron yung katapat na the future value of money, no? And in our case, wala yung kanyang chat. Okay. Okay, saan tayo? The present value of money. Iba pa yung annuity ha. Yung annuity related concept yon. Wala naman tayo nakikita ang application dito ng annuity, ano? Present value at saka future value meron. And yan ay sakop ng topic na compounding interest, no? Sa compounding, merong present value at future value. Now, actually, manosolve yan ng tatlong paraan, ano? Ang ginagamit ko, formula. Pwede rin niyang masolve. Na, I'm talking of the present and future values, no? Pwede rin sa calculator, pwede rin sa table. Now, ang ginagawa ko, I have the formula, no? Sa okay. Okay. So, kapag may mga terms na hindi kayo pamilyar, tanungin nyo si Google, ano? Nakaka-encounter ako dito ng mga words na before that, no? Ito, no? Now, the present value of money is 100, no? So, meron niyang, ano, future value equivalent. Depende sa interest na ginagamit mo, no? Ito, merong 1 and merong 2. Compounding to, no? Ibig sabihin ito, compounding. Ito, year, ano? In years. Sa konsepto ng compounding, after 1 year, huwag mong galawin yung pera mo sa time deposit. At sa susunod na period, kung yan year, after second year, ang nag-earn ng interest ay hindi lamang yung iyong original principal, pati iyo kasama na rin yung interest ng first year na hindi mo ginalaw. So yung pera mo, lalago ng lalago, no? Now, that is earning money with interest. Din naman yung nangutang ka ng pera, borrowing cost. Ganun din. Yung inutang mong 100, kung babayaran mo yan in some future time, after 1 year, 110. Now, kung hindi mo binayaran yung 110 na yan after first year, yung 100 mong inutang today, after 2 years, magiging 121. No? Paano? No? Now, so 110 over a number is equal to 100. Okay? So, now, the ang present value niya ay 100, which is equal to yung numerator mong 110, 121, yan ang tinatawag na compounded amount or the future value divided by 1 plus interest expressed in decimal. So 1.10. Raised to the power, kung ang period mo 1, meaning 1 year, ano? Raised to the power 1. Or compounded for 2 years, ang exponent mo 2, no? And here, because of combination, should be at the present value. Kaya nakikita nyo 100. Okay. Mga terminologies na dapat ninyo, may nakita ko dito, no? Saan ba nagsimula ang iyong report? Mampasa pala tayo, no? Cash payable upfront. Ano ba yung sabihin ng upfront? Yan, no? Payable in advance. Ang ibig sabihin yan. Okay. Now, kung bakit nag-appear ang mga numerong yan, ano? Analyze mo lang yan. Pag-isipang mabuti. Ang sagot, nandyan din, no? At wala namang typographical errors sa ini-report ni Kia. Plus, do you have any question at this point? Now, itatanong nyo kung bakit lumabas itong ganito mga numero, no? Now, ito yung tinatawag na, kung yung missing amount, edi yung balancing figure, alam naman natin na total debits equals total credit. No? So, bakit naging 1 million to? Yan ang shortfall na tinatawag. Kasi hindi nila na-achieve yung 5 million. Ang na-achieve lang nila 4 million. So there is that shortfall of 1 million. And stated also sa problem na suppose only 4 million profit, so shortfall by 1 million. Recalculate the fair value of the contingent consideration end of year 1. So the measurement period adjustments to the cost of combination and the revised goodwill, or combination. Okay. So, kung mas malaki ang cost of combination sa mga fair value ng binibili, may goodwill, ano? May goodwill. At kapag nagkaroon ng mga later adjustments na dapat lumiit charge sa goodwill, ililiit din yung ano mo, credit na contingent consideration payable. Okay. Okay. So, basahin uli. At kung kayo may mga tanong, okay, saka nyo tanong sa akin, no? Para kayo may nakikita diyan na itatanong nyo. Okay. So, wala akong makitang pwede nyo itanong. So, pag binili ng A, ang B, at through purchase of yung stock acquisition ika nga, ano, many times hindi 100%. So may naiiwan pa, no, na pag-aari ng iba. Now, kung nakokontrol ng company A, so yung naiiwan, yun ang non-controlling interest or ang tawag diyan ay the minority interest. The non-controlling interest or the minority interest na in the previous report ay dalawang paraan para ma-compute kung magkano ang non-controlling interest. Isa base sa ano, parehong base sa fair value, no? Pareho. Yung isa fair value ng ano, ng net identifiable assets, no? Meron namang ano, fair value ng ordinary shares ng acquiring. Yun, magbibigay sa iyo ng ano, possible, magbibigay sa iyo ng magkaibang ano, amount ng non-controlling interest. Now, ang popular na ginagamit sa practice, ano, at saka sa later discussion ng textbook, ay base sa fair value ng ordinary shares ng acquiree. No? Okay, so I'll be waiting if you have still questions on this area. No? So we go to the next speaker. This time, the reviewer, Almendras. Will you be using your share screen?
Opo, sir.
Almendras. Okay. Sige. Ayaw. Ayaw mag-respond. Ayaw mag-respond to sa akin. Let us see the problems appearing in the reviewer.
Wait lang po sa share screen.
Sige.
Good evening, everyone. I will discuss the reviewer about business combinations. First problem, Red Corporation will issue common shares with a par value 10 pesos for the net assets of Blue Company. Red's common stock has a current market value of 40 pesos per share. Blue's statement of financial position on the date of acquisition follow. Current assets 320,000, property and equipment 880,000, liabilities 400,000. Common stock 5 pesos par 80,000 pesos, additional paid in capital 320,000. Retained earnings 400,000. Those current assets are appraised at 400,000 and the property and equipment was also appraised at 1,600,000. Its liabilities are fairly valued. Accordingly, Red Corporation issued shares of its common stock with a total market value equal to that of Blue's net assets including goodwill. To recognize goodwill of 200,000 pesos, how many shares were to be issued by Red? A. 45,000, B. 40,000, C. 50,000, D. 55,000. The answer is A. 45,000. Para makuha yung number of shares to be issued, ito yung solution. Fair value of net identifiable assets acquired, current assets, 400,000. Ang gagamitin na value dito ay yung appraised na ito. Property and equipment, 1,600,000. Liabilities, 400,000. Ito-total tong tatlo to get the net assets acquired. Sabi kahapon sa discussion, net asset equals total assets minus liabilities. So, 400,000 plus 1,600,000 minus 400,000 equals 1,600,000. Add goodwill, 200,000 equals acquisition cost, 1,800,000 divided by market value per share, 40 pesos, equals number of shares to be issued, 45,000. Next problem, Brook Corporation was merged into Horse Company in a combination properly accounted for as an acquisition. Their condensed statement of financial position before the combination are current assets of Brook is 3,288,888, while for Horse is 1,627,600. Property and equipment of Brook is 4,654,000, while for Horse is 1,040,000. Patents of Horse is 260,000. Total assets of Rook is 7,942,000, while for Horse is 2,927,000. Liabilities of Rook is 3,704,000, while for Horse is 171,600. Capital stock par 100 pesos of Rook is 2,600,000, while for Horse is 1,300,000. Additional paid in capital of Rook 390,000, while for Horse is 350,000. Retained earnings of Rook is 1,248,000, while for Horse is 1,106,000. Total liabilities and equity of Rook is 7,942,000, while for Horse is 2,927,000. Per appraisal's report, Horse assets have fair values of current assets 1,653,000, property and equipment 1,248,000, patents 338,000. Apro Corporation purchases the net assets of Horse for 3,168,000 cash. What is the total net asset of Apro Corporation after the combination? A. 7,354,000. B. 7,254,000. C. 8,113,600. D. 9,181,600. The answer is 8,113,600. Ito yung solution kung paano yung nakuha. Price paid, 3,168,000. Ito yung binayad ni Horse kay Rook. Ay, ni Rook kay Horse. Less fair value of net identifiable assets acquired, current assets, 1,653,600. Kagaya nung kanina, ang value na gagamitin ay yung appraised na. Property and equipment, 1,248,000. Patents, 338,000. Liabilities, 171,600. Ito total to. So, ang fair value of net identifiable assets acquired ay 3,068,000. Pagmaminus yung price paid at fair value of net identifiable assets para makuha yung goodwill or non-identifiable assets. 3,168,000 minus 3,068,000 equals 100,000. After getting the goodwill, pagsasamahin na yung assets nila. Total assets after combination, Rook, 7,942,000. Ito yung total assets ni Rook. Minus 3,168,000 yung ibinayad kay Horse equals 4,774,000. Acquired from Horse, 3,239,600. Ito yung total assets ni Horse, yung dito sa appraise na. Plus 100,000 goodwill equals 3,339,600. So, ang total assets ay 8,113,600. Number 10, Pitt Corporation and Sol Company agreed to combine their businesses with Pitt Corporation as the surviving entity. Pitt will issue 48,000 shares of its capital stock with a par value of 100 pesos per share and a fair market value of 175 pesos per share. Pitt incurred the following additional acquisition-related costs. Professional fees, 120,000 pesos. Broker's fees, 80,000. Costs to register and issue stock, 50,000. Before combination, their respective statement of financial position showed stockholders' equity account as follows. Capital stock of Pitt, 7,200,000, while for Sol is 3,600,000. Additional paid in capital of Pitt is 3,120,000, while for Sol is 360,000. Retained earnings of Pitt is 6 million, while for Sol is 2,040,000. The total stockholders' equity of Pitt Corporation after the combination is A. 24,720,000, B. 24,470,000, C. 24,670,000, D. 24,890,000. The answer is B. 24,470,000. Makikita natin dito yung solution kung paano yan nakuha. Stockholders' equity before combination ni Pitt, 16,320,000. Ito yung total nito. Capital stock issued, 48,000. Issued share times 100,000 par value, 100 pesos par value equals 4,800,000. APIC or additional paid in capital, 48,000 shares, issued shares times 75 pesos. Itong 75 nakuha siya dito sa pag pinag-minus yung fair market value at par value. So, 175 minus 100 equals 75. Minus 50,000 na cost to register and issue stock equals 3,550,000. Expenses, 120,000. Professional fees plus 80,000. Broker fees equals 200,000. The total, so 8,150,000 Tapos i-add sa stockholders equity before combination. Sagot ay stockholders equity after combination ni Pip ay 24,470,000. Number 11, Papa Corporation issued 120,000 shares of 10 pesos par common stock with a fair value of 2,550,000 for all the outstanding stock of Mama Company. In addition, Papa incurred the following costs: professional fees to arrange the business combination, 27,000; costs sec registration, 12,000; costs of printing and issuing stock certificates, 3,000. Immediately before the business combination in which Mama Company was dissolved, Mama's asset and equities were as follows in thousands. Book value of current assets, 1,000, while the fair value of current asset is 1,100. Book value of plant asset is 1,500 while the fair value is 2,200. Book value and fair value of liabilities is 300. Book value of common stock is 2,000. Book value of retained earnings is 200. What is the amount of goodwill or gain on acquisition? A. 450,000. B. Negative 550,000. C. Negative 450,000. D. 500,000. The answer is C. Negative 450,000. Para makuha yung amount ng goodwill o ng gain on acquisition, ipagmaminus ang fair value of stock issued, 2,550,000 at fair value of net assets acquired na 3 million. Itong 3 million, nakuha siya dito sa fair value ng asset at liabilities ni Mama. So, ang gain on acquisition is for negative 450,000. Goodwill kapag positive yung sagot, gain on acquisition kapag negative. Number 12, using the data in number 11, how much additional paid-in capital is recorded by Papa? A. 1,350,000. B. 1,335,000. C. 1,365,000. D. 1,330,000. The answer is B. 1,335,000. Ito yung solution kung paano yung nakuha. Fair value of stock issued, 2,550,000. Par value, 120,000 shares times 10 pesos. Par value equals 1,200,000. Pagmamainasin itong dalawa, kaya ang additional paid-in capital is 1,350,000. Tapos ilales yung cost of sec registration, 12,000 at cost printing and issuing stock certificates na 3,000. So, ang additional paid-in capital recorded ay 1,335,000. Number 13, using the data in number 11, Papa should recognize expense of A. 32,000, B. 27,000, C. 15,000, D. 12,000. Explanation. The answer is B. 27,000. Explanation. Expenses to be recognized are only the professional fees of 27,000. Yun lang po.
Okay. So there ends the report, and I am observing na wala pang mga tanong na related sa sa contingency payable, no? Wala pa. Now, makapal yung reviewer, kapal. So there is still much to be learned pagdating sa business combination, no? There's still much to be learned. Kaya lang, budgeted ang oras natin no? Budgeted ang oras. And then, okay. And that is the end of the business combination, no? We will go to the next chapter, which is the preparation of the consolidated financial statements between the parent and the subsidiary. So that's another big chapter, But I hope you learn much or try to learn much from the business combination chapter. That is a preparation in going to the next chapter, the preparation of the consolidated uh, financial statements. Plus, any question at this point? No? Okay. So, if you are to buy something and you will be spending more money than what you know is the real worth of the thing, there is that difference, ano? Perhaps the thing that you are buying is that goodwill, or the other way around. Maybe in your buying, you gain, you gain from a bargain purchase. Ika nga. Now, so there's no question. Let me check this time. This evening, our photographer, si Rose Ann. Rose Ann, I hope that you are still there. Rose
Po,
Ann.
sir.
Okay, you open your camera for the next number of our report for today. Aha, pa nag-open na aking camera. Sa akin wala. Kita na ba niyo ako?
Opo, sir.
Kita na ako. Okay. So you just say 1, 2, 3 at we will show our smile for the day, for yesterdays to come.
1, 2, 3.
Okay. We wait for the cherry na saan? O, naka-side view na naman sa cherry.
Sir, hindi po. Nakaharap talaga ako, sir.
Ah, nakaharap ka. One time ako naka-side view. Hindi pa nag-ring ah. Kapag ba tumunog, nag-sound yung cellphone, anong tawag doon? Nag-ring o nag-alarm? Ayun. Ring. Okay, nag-ready. Andito na. Plus. Bye-bye.
Thank you po.
Thank you,
We'll meet
sir.
again next week.
Thank you po, sir.
Okay.
Po, sir.